Well, so just recently we've seen several discussions on the internet about how rich people should get taxed. And of course, don't get me wrong, I really support them paying their due in taxes. But have you ever sat down to think about how they are able to avoid taxes altogether and pay very little as compared with employees who work out their asses every single day throughout the week, and yet still they get to pay more than all these multi-billionaires and all these multi-millionaires out there who own all the private jets, all the good things, the yachts and everything, and yet still they get to pay very little in taxes. Well, in this video, we'll be discussing the mechanisms or the strategies that they use to limit their tax liability. Oh, so before we go to the strategies, let me take time to explain two terms that I believe would actually form the basis for understanding of this video, and that is tax evasion and tax avoidance. So tax evasion is the illegal way of avoiding taxes, or simply put, you're not paying taxes. However, tax avoidance is a way that people tend to exploit the loopholes within our tax systems, and that actually helps them in the long run to also avoid taxes altogether. But unlike tax evasion, which is illegal, which you can't be charged for avoiding taxes or not paying them altogether when you're due, what actually happens with tax avoidance is that all these multi-millionaires and billionaires and even individuals on some level tend to find various loopholes that are legitimate or legal in the system to avoid paying all taxes, or sometimes even limiting their tax liability. Well, and for the avoidance of doubt, a tax is any obligation or a liability that is owed the government for using or for making money within a particular country. And this brings us to the first tax avoidance mechanism, known as the double Irish with a Dutch sandwich. Now, mind you, that is not food because it sounds delicious already, but this is a tax avoidance mechanism that corporations like Microsoft and Apple tend to adopt in order to limit their tax liabilities in the US while shifting their profits into countries that have lower corporation tax rates. So for example, in the US, there is a 21% corporation tax rate. In the UK, there is a corporation tax rate of 25%. So what these companies tend to do is that they want to limit their liabilities. So they register companies in countries that have lower corporation tax rates, which helps them to subsequently limit the amount of money that they pay in taxes. For example, in 2017, Google was able to shift nearly 16 billion worth of euros through this same mechanism. So what they did was they registered two companies in Ireland. So let's call it Irish Company A and Irish Company B. So Irish Company A is the one to whom all the intellectual property, talk about the trademarks and the patents that Google use or sell in the US, they are the ones that actually own them. And then they give the legal clearance to Irish Company B to use those patents, who subsequently grants clearance for Google in the US to sell and use those patents or that intellectual property. So mind you, Google doesn't own any of these intellectual property, which means that any money accrued from the sale or the use of these intellectual property should go back to Irish Company A, which simply means that all the profits that are made in the US doesn't stay in the US to attract that 21% corporation tax rate. Instead, it must be shifted back to Irish Company A, who owns intellectual property that Google used or made sales from in the US. So mind you, the money is being made in the US, but because of a higher corporation tax rate, these companies and these corporations shift all the profits back into the countries with a lower corporation tax rate. So what happens is that Google in the US sends all the money back to Irish Company B, who subsequently passes the money through a Dutch company. And that Dutch company is there in the middle of these two Irish companies to reduce the withholding tax rate that you would have to pay when receiving royalties from the use of intellectual property from any other parts outside the European Union. So that is the ultimate purpose of the Dutch company. The Dutch company received the proceeds from Irish Company B, and then subsequently everything goes back to Irish Company A. But what happens is that Irish Company A isn't a tax resident of Ireland. It is a tax resident of Bermuda. And back in the day, Ireland had a simple law that you cannot tax corporations that are managed from outside Ireland or corporations that are tax residents of external countries. For example, in this case, Ireland Company A, mind you, is not a tax resident of Ireland, but rather a tax resident of Bermuda. So what happens is that, okay, if the money has come in right from Google through to the Dutch company and then to Irish company B, and then subsequently everything is powered back to Irish company A, then automatically Irish company A should pay the taxes because the money and the profits have shifted through the system back to Irish company A. But this is where it gets interesting. Irish company A isn't a tax resident of Ireland, so it doesn't pay taxes in Ireland. Rather, it is a tax resident of Bermuda. And mind you, Bermuda has a 0% corporation tax rate. So what that simply means is that all the money is coming through all these companies, right from Google in the US through to the Dutch company, back to Irish company B, and subsequently to Irish company A, gets no taxes. It only attracts limited fees in the course of profit shifting. And that is how the ultra rich tend to siphon money, and they tend to shift and avoid taxes altogether. This is something that the average person cannot do, because even before your paycheck reaches your hand, the money is already taken out. The 20% ranging between 20% and 45% for high income earners is taken already, even before you have the chance to get your money. And that is where people's anger and their fuming and everything comes from. This brings us to the second strategy, which is buy, borrow, and die. Mind you, this is a tax avoidance mechanism that the ultra rich tend to use to avoid taxes. And this is how it works. So they purchase assets like stocks and real estate, and then they borrow against the value of these stocks and these real estate, which subsequently grants them the ability to avoid taxes. And this is what they do simply. So when they purchase those assets and the assets grow in value, capital appreciation as it's known, then they borrow against the value of the assets. And mind you, you cannot tax loans. So when they take loans from the banks and from even individuals and sometimes corporations to fund their lifestyle, for example, or to start any project, the government cannot tax it because loans are not taxable. So they use these assets as collateral to gain access to enormous amount of money, and that helps them to even grow even richer. So they borrow against these assets. They don't sell the asset to realize any capital gains that is taxable. Mind you, anytime you make capital gains or you sell something, then you would attract tax. But because they don't want to pay those taxes, they tend to borrow against the assets that they've acquired already, and that reduces their tax liability drastically. And they don't even in many cases have to pay any taxes. So instead of selling stock to actually attract the capital gains tax, they borrow from the banks against the value of these stocks. For example, when Elon Musk wanted to buy Twitter, he didn't go out there to sell stocks to raise the money to buy Twitter. He didn't. He went out to secure a loan against the value of his stocks in Tesla. And that was really how he was able to purchase Twitter. It is as simple as ABC. They use loans and they leverage their assets in order to avoid taxes. This brings us to the third point, which is that multimillionaires and billionaires pay themselves in stock options and dividends. And let's talk first about dividends. Dividends are proceeds from stocks. So anytime you hold stocks or you own stocks at the end of probably like 3 months or every 6 months or sometimes at the end of the year, the payment of dividend is left at the discretion of the board of directors. So they determine whenever dividends are paid. So if you own X amount of shares, they declare how much you'll be paid per share. So sometimes they can say, for instance, okay, we'll pay you 50 pence or 50 cents per share. And that is the amount of money that you'd earn for holding one share in that company. So that is the periodic payments that they make for owning a share in that company. So mind you, multimillionaires and billionaires own shares and they earn dividends. And dividend taxes are relatively lower than what we attract on our disposable income tax. So by earning dividends instead of income, they tend to reduce their tax liability. And that is the first point. Secondly, multimillionaires and billionaires tend to pay themselves in stock options. So stock options are simple. Anytime that they assume any company, like a top position in any company at all, they are given the option to purchase stocks in the company if they are able to perform or able to execute in accordance with their directions or the responsibilities that is required of them in that company. So for example, Elon Musk got richer because he assumed the position as the CEO of Tesla. But mind you, at that time, Tesla wasn't as popular and it wasn't as valuable as it is today. So what happened was that they gave him the option, and that is simply the option to purchase stocks in Tesla at a reduced price. So irrespective of how much Tesla stocks or shares would go, Elon Musk still exercises the option to purchase those stocks at a relatively cheaper rate, provided he is able to grow the company to a certain threshold. So for example, if they are able to task him that, Musk, you have to grow Tesla first of all to $200 billion valuation, and then as a result of that, we would give you maybe 50,000 shares in the company. However, if you're able to grow it even further to $500 billion valuation, then we would also grant you the ability to purchase maybe like 100,000 more shares. And then if you're able to take it finally to maybe $1 trillion valuation, then we would give you maybe 500,000 shares in Tesla. So that is how it works. And that doesn't attract any tax, because it is simply the ability to exercise your shares. So they borrow money to purchase those shares. And then once again, like I said earlier, when you borrow money to acquire something, you cannot tax it. You cannot tax loans and cannot tax liabilities. So the government is left in a very, very tight corner. It cannot tax the proceeds from any of these assets and the purchases and thereof. And if in the near future they hold or they buy these shares and they gain dividends, this dividend income is not as high as what we tend to pay through our disposable income. And that is one of the ways that they also limit their tax liabilities and avoid taxes altogether. So instead of getting paid a salary, they tend to exercise the option to get more shares in the company or to earn dividends, as opposed to getting paid a salary and attracting the 45% disposable income tax rate. This brings us to the last point, which is that multimillionaires and billionaires tend to reduce their tax liability by entrusting their assets into multinational corporations and companies known as trusts. So they seed all their assets into trusteeship. And what that simply means is that the companies are now responsible for the assets. So for example, if they are to die, touch wood, and then they pass on all these assets to their successors, what happens is that these companies limit their wealth taxes and their inheritance taxes through several mechanisms that involves also what we've listed and spoken about earlier. But what that simply means is that they are fortified against taxes and several other liabilities that they would have otherwise been exposed had it been transferred to them directly, as opposed to being transferred to them through a trust. So that is it. These are the mechanisms that they use mainly to avoid taxes. And these are not options that the average person out there working a 9 to 5 can exercise. And that is why, once again, people are really pissed about them not paying their due when it comes to taxes. But then I always say that we cannot blame them entirely. The government and the systems that we have adopted is also one of the reasons why these people exploit and then actually grow richer and then squeeze the middle class and the people below them. So after all these, one would ask, what can be done about it? So currently, there is an organization known as the OECD, the Organization for Economic Cooperation and Development, and they are in charge of making sure that all companies in the world, there are 38 member states that are members of the OECD. And what they tend to do is that they are trying so hard, trying to negotiate to make sure that no country has a corporation tax rate that is below 15%, so that it would avoid all these mechanisms of profit shifting and multimillionaires becoming residents of countries that eventually helps them to avoid taxes and not pay them altogether. Let me know your comments in the comment section and let's have a discussion. Subsequently, I'll be shooting several videos on problems like this, so you might want to like and subscribe to the channel. Thank you and see you in the next video.